It's 2:13 a.m. Not the dramatic kind of late night, the uncomfortable kind. The market is open, but nothing is happening. No breaking news, no volatility spikes, no excuse to trade. Just candles printing slowly, one after another. Cold, indifferent. The market looks calm. You are not. You've been sitting in front of the screen longer than you planned. Longer than you promised yourself. Your eyes burn. Your shoulders are tight. Your mind refuses to slow down. Your finger is hovering over the buy button. Not because the setup is perfect, not because probability is clearly in your favor, but because you cannot afford for this trade to fail. Your account balance sits quietly in the corner of the screen. Not blown, not safe. Lower than it should be. Lower than you expected by now. So that dangerous middle zone where hope still exists. And hope is dangerous. You remember when trading felt exciting, the early days, the first wins, the confidence. You remember thinking, I just needed time. I'm learning fast. I'll be consistent soon. Now every trade feels heavy, personal, like it needs to work. And the moment a trade needs to work, trading stops being trading. It becomes emotional survival. Price moves a few points in your direction. Your body reacts instantly. Your shoulders drop. Your breathing slows. Relief. Not happiness. Relief. That feeling right there is one of the most dangerous sensations in trading, because your brain just learned something. Placing a trade can remove discomfort. That's how traders get addicted. Not to money, to relief. Then price pauses. It doesn't crash. It doesn't explode. It just hesitates. Enough to make your heart rate rise again. Enough to pull you closer to the screen. A familiar voice appears in your head. Don't let this turn into a loss. It'll come back. You're still right. Just give it a little more room. So you move the stop. Barely. Just a few points. You call it flexibility. You call it experience. But you know the truth. You don't want to be wrong. And in trading, the moment you refuse to be wrong, you start paying for it. This is how most traders actually lose money. Not in one big emotional explosion. Not in one reckless all-in trade. They lose quietly. One rule bent. One stop moved. One extra trade taken because doing nothing feels unbearable. Until one day the account looks unfamiliar. And the trader honestly can't remember when discipline disappeared. Here's the truth most traders never accept. The market does not destroy traders. Traders destroy themselves. 95% of traders don't lose money because they're stupid. They don't lose because they're lazy. They don't even lose because their strategy is bad. They lose because trading forces humans to operate under uncertainty. And humans hate uncertainty. They want control. They want certainty. They want to be right. Markets offer none of that. Trading is not a technical game. It's a psychological one. The market doesn't reward effort. It doesn't reward motivation. It doesn't reward desire. It rewards discipline, consistency, emotional control. Most people enter trading believing success comes from prediction, calling tops, catching bottoms, to being right more often than wrong. That belief alone guarantees failure, because markets are probabilistic, losses are guaranteed, uncertainty is permanent, discomfort is unavoidable. Yet most traders react emotionally every time price moves against them. They take losses personally. They celebrate wins emotionally. They attach identity to outcomes. And once identity is involved, objectivity disappears. Most losing traders are not reckless. They are hopeful. Hope that price will reverse. Hope that this trade will fix the last one. Hope that they're closer to success than they really are. Hope replaces structure, and structure is the only thing that keeps traders alive long enough to improve. Winning traders understand something boring, simple, and powerful. Trading is not about winning trades. It's about executing a process correctly, again and again. Losses are not failures. They are business expenses. Overtrading, oversized risk, and emotional decision-making are the real killers. At some point, every trader reaches a quiet realization. Trading is not about learning more strategies. It's about becoming someone who can follow rules without emotion, accept losses without reaction, wait without boredom controlling them. Most people are unwilling to make that change. That is why most people never make it. This is the foundation. Before indicators, before leverage, before advanced systems. If this foundation is weak, nothing built on top of it will survive. This is why 95% of traders lose money. Not quickly, not dramatically, slowly, predictably. There's a phase in trading that feels like progress. You're not a beginner anymore. You understand charts. You recognize patterns. You know what a good setup looks like. And that's exactly why it's dangerous. Because confidence arrives before discipline. At this stage, trading starts to feel familiar. You've seen these candles before. You've traded this structure before. You've been right enough times to believe you're improving. You stop asking, should I take this trade? You start saying, I know how this usually plays out. And that small mental shift changes everything. The first few wins at this stage feel powerful, not because of the money, because of validation. You feel smart, capable, ahead of most people. You think, I'm finally getting it. I just needed screen time. This is starting to click. And slowly, without noticing, your behavior begins to change. You check charts more often. You take trades that are almost your setup. You justify entries instead of waiting for them. You tell yourself, this is basically the same thing. I don't want to miss this move. I've seen this pattern 100 times. This is how rules start to bend. Not aggressively, quietly. Early wins are more dangerous than early losses. Losses teach caution. Wins teach confidence. And confidence in trading is a double-edged blade. Here's the trap most traders fall into at this stage. They believe confidence should increase risk. They think, if I'm getting better, I should trade bigger. If I'm winning, I should push harder. That logic works in normal life. It does not work in trading. Trading is not linear. Effort does not equal reward. Confidence does not equal safety. Probability does not care how good you feel. When traders increase size too early, 3 things happen. First, losses hurt more. Second, emotions rise faster. Third, decision-making degrades. Trades stop feeling neutral. They start feeling personal. You're no longer just losing money. You're losing confidence. You're losing control. And once control is gone, everything collapses quickly. This is where revenge trading is born. A loss no longer feels like a business expense. It feels unfair, like the market took something from you, so you try to get it back, fast. You enter trades without confirmation. You size up without thinking. You trade setups you would normally ignore. You're no longer trading the market. You're fighting it, and the market always wins that fight. Another silent killer at this stage is overtrading. Most traders believe opportunity is constant. It's not. Markets spend most of their time doing nothing useful. But traders don't like nothing. Nothing feels like failure. So they force trades. They trade boredom. They trade frustration. They trade impatience. They confuse activity with progress. Here's the truth. Most traders don't lose money because of bad trades. They lose money because of too many average trades. Winning traders understand something most people hate. The best trade is often no trade. Waiting is not weakness. Waiting is protection. But protection doesn't feel productive, so most traders ignore it. Another trap at this level is complexity addiction. Traders start adding indicators, more confirmations, more time frames. They believe complexity equals safety. It doesn't. Complexity creates hesitation. Hesitation creates late entries. Late entries destroy risk-reward. Winners simplify. Losers complicate. Then there's the biggest trap of all. Ego. Ego wants to be right. Ego wants to predict. Ego wants recognition. Ego hates stop losses. Because a stop loss means admitting you were wrong. So traders move stops, remove stops, ignore stops. They tell themselves, the market is just testing me. This is manipulation. It'll reverse. And sometimes it does, which makes the habit worse, because now the trader believes breaking rules works, until the one time it doesn't, and that one time erases months of progress. Here's a brutal truth most traders never hear. One bad day can destroy a trader who spent months building confidence. And that's why winners protect themselves from themselves. They don't trust emotions. They don't trust confidence. They don't trust instinct. They trust rules. Most losing traders ask, how do I win more trades? Winning traders ask, how do I make sure no single trade can hurt me? That question changes everything. Risk is not about stop-loss placement. Risk is about emotional survivability. If a loss makes you angry, you're risking too much. If a loss makes you revenge trade, you're risking too much. If a loss changes your behavior, you're risking too much. Winning traders keep risks so small that losses feel boring. Boring is good. Boring keeps you alive. Another reason traders fail here is time pressure. They believe they are late. Late to success, late to money, late compared to others. So they rush. They force trades. They force growth. They force results. But trading cannot be rushed. Markets don't care about your timeline. Winners accept this. Losers fight it. This is why so many traders quit just before improvement. They're tired, frustrated, emotionally drained. They think they're failing. In reality, they're usually one behavior change away from progress, but they quit before making it. Let this sink in. Most traders don't fail because they can't trade. They fail because they can't stay consistent long enough. Consistency is boring. Consistency is repetitive. Consistency is uncomfortable. But consistency is everything. The market does not reward brilliance. It rewards discipline. It does not reward speed. It rewards patience. It does not reward confidence. It rewards control. And this is why 95% of traders lose money. Not because trading is impossible, but because trading requires becoming someone most people refuse to become. There comes a moment in every trader's journey where something finally clicks. Not on the chart, in the mind. You realize the market never promised certainty. You did. Losing traders think in single trades. They stare at one setup, one entry, one outcome. They ask one question over and over. Will this trade work? And that question keeps them trapped forever. Winning traders think in series. They don't care about this trade, they care about the next 100. They ask a different question. If I take this exact setup 100 times, what happens? That shift changes everything. The market is not a place where you prove intelligence. It's a place where you execute an edge repeatedly. One trade means nothing. 5 trades mean nothing. 20 trades start to show noise. 50 trades start to show structure. 100 trades reveal truth. Most traders never reach that point because they emotionally react long before probability has time to work. This is where most traders sabotage themselves. They try to improve results before improving process. They change strategy after a loss. They change time frame after drawdown. They change rules after frustration. They think adaptability is strength. In trading, it's usually weakness. Winners lock the process. They accept short-term pain. They accept drawdowns. They accept boredom. They don't interfere. They let statistics do the work. A real trading system answers questions before money is at risk. Where do I enter? Why do I enter? Where am I wrong? How much do I lose if I'm wrong? What conditions invalidate this idea? If these answers are not clear, the trade does not exist. Losing traders create rules after entering. Winning traders follow rules before entering. This is why losing traders feel stressed. They are thinking while money is on the line. That is the worst time to think. Winners do the thinking when the market is closed. Execution becomes mechanical, emotionless. Another difference most traders miss. Losing traders need excitement. Winning traders eliminate it. Excitement creates urgency. Urgency creates mistakes. Mistakes destroy accounts. Calm creates clarity. Clarity creates discipline. Discipline creates survival. Risk management is where the gap becomes obvious. Most traders ask, how tight should my stop be? Winners ask, how small should my position be? Stops don't protect accounts. Position sizing does. If a stop loss hits and you feel emotional, the problem is not the stop. The problem is size. Winning traders choose position sizes that feel almost boring. Losses don't hurt. Wins don't excite. That emotional neutrality is not accidental. It's engineered. Most traders want to feel something. Winners want to feel nothing. Another rule winners live by. No trade should change your emotional state. If it does, risk is too high. Then there's the concept most traders ignore until it's too late. Maximum daily loss. Without it, one bad day turns into account damage. Winners stop trading when they hit their loss limit. Not because the market changed, because they did. Professional traders know something retail traders resist. Your mental state matters more than your setup. If you're tired, you don't trade. If you're angry, you don't trade. If you're desperate, you don't trade. The market will be there tomorrow. Your account might not. Another key difference. Losing traders chase frequency. Winning traders chase quality. One clean setup a week can outperform 10 emotional trades a day. Here's why most traders never build consistency. They journal profits and losses. That's useless. Winners journal behavior. Why they entered, why they exited, whether rules were followed, how emotions behaved. Because patterns live in behavior, not charts. Over time, winners stop trying to learn the market. They learn themselves. They know when they're dangerous. They know when emotions rise. They know when to stop. Self-awareness becomes an edge. Another hard truth. You don't scale profits by trading more. You scale profits by trading better. Scaling comes last. After consistency. After discipline. After boredom. Never before. Most traders want to act like professionals without doing professional things. Professionals. Trade small. Follow rules. Respect limits. Stop when conditions change. Retail traders. Chase. Force. Hope. React. The difference is not intelligence. It's restraint. Markets reward restraint quietly. They punish impulsiveness loudly. At this stage, something becomes clear. Winning traders are not trying to outsmart the market. They are trying to out-discipline themselves. That's why they survive. That's why they grow. That's why most people never reach this level. There's a moment in trading that doesn't look like success. No celebration, no screenshots, no adrenaline, just silence. You open the charts, you check your conditions, and there's nothing to do. No clean setup, no clear edge, no reason to trade, so you close the platform. And for the first time, that feels okay. This is the moment most traders never reach, because this is the moment where trading stops controlling you. Earlier, doing nothing felt uncomfortable. It felt like wasted time, like missed opportunity, like failure. Now it feels different. It feels responsible. Winning traders don't wake up chasing the market. They don't feel urgency. They don't feel pressure. They don't feel behind. They know one thing very clearly. The market doesn't owe them anything. This is the final mindset shift. You stop trying to win today. You start trying to last for years. Most traders spend their entire journey asking the wrong question. How do I make money faster? Winners ask a quieter question. How do I stay consistent long enough for money to come naturally? Longevity changes everything. When you stop rushing, mistakes shrink. When mistakes shrink, confidence stabilizes. When confidence stabilizes, discipline becomes automatic. At this level, trading feels boring, routine, predictable, and that's exactly why it works. Winning traders don't need excitement. They don't need to feel smart. They don't need to prove anything. They need clarity. They understand something most traders fight for years. The market does not care about your opinion. It doesn't care about your analysis. It doesn't care how badly you want it. Yes, it only responds to behavior. And behavior is the only thing you control. This is why winners focus more on themselves than charts. They train patience. They train restraint. They train emotional neutrality. Charts become secondary. Another truth becomes clear here. There is no finish line in trading. No moment where you arrive. Only maintenance. Only repetition. Only discipline, day after day. Most traders hate this idea. They want completion. They want certainty. They want success to feel final. It never does. Trading rewards those who can repeat the same good decisions without getting bored, without getting greedy, without getting scared. At this stage, money stops being the main goal. Freedom becomes the goal. Freedom from emotional swings. Freedom from desperation. Freedom from needing every trade to matter. And this is why winners don't force trades. They don't chase losses. They don't chase wins. They wait. They understand something deeply. You don't make money by trading more. You make money by making fewer mistakes. Over years, small edges compound, not because they are powerful, but because they are protected. This is why most traders lose. They don't protect their edge. They expose it to impatience, overconfidence, pressure, ego, and eventually it disappears. Winners guard their edge quietly. They trade less. They talk less. They repeat more. One day, trading feels different. You place a trade. You manage risk. You accept the outcome. Win or loss. No reaction. And that's when you realize something important. You're no longer trying to control the market. You're controlling yourself. That is the real victory. Most people will never experience this. Not because they can't trade, but because they can't let go of urgency. Urgency destroys discipline. Discipline creates consistency. Consistency creates survival. This is why 95% of traders lose money. They chase certainty in uncertainty. They chase excitement in a game that rewards calm. They chase results instead of process. And this is why winners do something different. They slow down. They simplify. They protect capital. They protect themselves. No hype, no shortcuts, no drama, just quiet execution. If you remember one line from this entire story, remember this. Trading success is not about being smarter than the market. It's about being calmer than yourself.